Hello, listeners, and welcome back to another episode of Quote Unquote with KK. We had to pause our programming due to some business and my personal health reasons. However, we have a lineup of several podcasts which I promise to release shortly. Coming back to today's podcast, firstly, Donald Trump is back in the White House, and we wish him all the very best for his term as the President of the United States of America. A lot went around the world since Trump 1.0 and Trump 2.0, which we have covered in many of our podcasts across our last few seasons. Just to recap, in our season 2, we had invited Sridhar Chitala, Chairman and Managing Partner, Elevate Innovation Partners, to discuss on geopolitics and Bidenomics. Later on, we also had Dr. Parag Khanna talk on the Ukraine conflict, which is still going on, and Dr. Mukesh Aggi on how to grow Indo-US ties. Since assuming the command at the White House for the second term, there has been a string of geopolitical, economic, and stock market events that has spooked the world. We investors are not insulated with these events too. Today it's time to discuss Trumpnomics 2.0 and its impact. The title of our podcast is World in Trump 2.0, Trumpnomics, Deepseeking or Deepthreatening. I am pleased to bring back Kevin Carter, who had been on our podcast in season 4 as well. He and his fund tracks India, China markets with a hawk's eye and can provide a better perspective on Trumpnomics 2.0. Let me reintroduce Kevin Carter to you once again. By the way, he is not a photographer and sports commentator, as you may Google his name. He is part of EMQQ Global. His profile is prolific and reads Kevin Carter is the founder and chief investment officer of EMQQ Global. While he considers himself as an active value investor, he has collaborated with Princeton economics and indexing legend Dr. Burton for more than 20 years. Their work together began in 1999 when Carter founded E-Investing, a pioneer firm in fractional share broking acquired by E-Trade in 2000. In 2002, they co-founded Active Investor Advisors, a pioneer in direct indexing acquired by Nextalis Asset Managers in 2005. In 2006, their efforts turned to China and emerging markets as they launched several China-focused ETFs on the NYSE with Guggenheim Partners. Kevin has founded EMQQ Global in 2014 and launched the emerging market internet and e-commerce ETF on NYSE in 2014. He has also now launched an India-focused internet and e-commerce ETF on the NYSE itself. Welcome back, Kevin. It's great to have you back.
So I wanted to keep this a little bit open-ended, get your take on the 4 years of Biden, how Biden has impacted India, US, China investments flows. Then let's talk about the recent issues on Trump, then what's happening in India and what's happening in China. Maybe what we can do is use the best political, economic, social, technological, and consumer. These 5 criteria to assess. And let's start predicting what's going to happen in the next 4 years of Trump in the Trumpnomics that we call it now. So I want to bring in, 4 years back, we had invited another fund manager who was very close to Biden administration and the White House, and he made predictions about what's going to happen in terms of investment flows. But it seems a lot has gone about in the world and under the Biden administration. So from your side, I wanted to start by asking you, what's your scorecard on Biden and Bidenomics and where he has left his legacy as the president of the United States of America and his impact on the world and the world of investing?
Well, that's a great question. And obviously, in the last month, there's been a whirlwind of political activity and government activity. And so that it seems like a long time ago because of all that's happened. But I think that, and I'm not a highly political person, but I think that it became pretty clear late in the Biden administration that he wasn't that sharp. He wasn't as sharp as you'd want your president to be. And I think that I'm somewhat apolitical, but if you look at the things that have been accomplished in the last, just 2 or 3 weeks at the border and otherwise, I don't know if it was Biden or just the system, but I think maybe the the U.S. just got complacent, or the government got complacent, and some of these things that were hard to do didn't get done because, easier not to do them. So in terms of India and investment in India, which I think is something else you asked about, I think that, India clearly needs a lot of investment. It needs a lot of manufacturing to come to the country. And, the government knows this, and they've got, multiple policy things in place to try to attract that. But, I think it hasn't happened as fast as people would like, but I think it's going to happen. But I don't know that
I'm
I
going to
would
touch about this in the next, somewhere down
Okay,
the line,
sure.
because we have this whole budget that just was announced last week. So that also delayed recording our podcast today. But just stepping back, Biden, I thought, Biden actually distanced both India and China and actually got India and China together. If you see from economics and investment point of view, the call for de-dollarization, the BRICS currency, all of that was at its height till Biden limited his position as president of America. How do you reflect back? And that's where the whole issue of investing and investor confidence comes in, and global flows of investable money comes in. How do you view this 4 years of Biden? And then we'll talk about the next 4 years and India and China and the manufacturing and all other issues that we want to discuss on our podcast today.
Sure. Well, I think that, personally, I think it was sort of a average at best sort of 4-year period. I mean, nothing that I recall got done that was great or meaningful domestically or internationally. The fact that, we've had this war in Ukraine for so long, that bothered me that it didn't get resolved or cleaned up, in the first weeks. And rather than, try to do that, we just started, shipping weapons. So, realistically, that conflict has been the backdrop of the administration. It's still going on. Correct. So the fact that continued, to me, is a failure by the United States. I mean, if we're the power of the world, it just seems that, we were in a position, should have been in, or could have put ourselves in a position to try to resolve the situation some way, shape, or form. But, all I saw were reports of different, weapons, and it bothered me in a lot of ways. But so, I don't blame Biden for the war, but it seems like years later, he was in charge of the most powerful country in the world, and it's, the war is not resolved yet. So I think that, is an important element and backdrop to the whole thing, because that's really had the world on edge in many ways for the last several years.
Kevin, I wanted to bring up certain issues more on the investing and investor confidence side during the Biden administration. You see, there was this whole Heidenberg incident that happened, and they issued some report on short selling of Adani Group shares. And obviously now they are defunct, or they've gone in for bankruptcy, or they're folded up. Similarly, there were U.S. Justice Department pursuing cases of bribery which were not even proven or tenable, and many such incidents which I thought would have led to shorting of investor confidence on India and Indian enterprises and the stock market and the environment as such, and more on the question mark of corporate governance in large corporates in India. How do you view this sort of incidents that occurred during the Biden administration? And do you think did it impact investment and investor sentiments towards India?
Well, here's what I would say. First, in terms of the Hindenburg report and then the later bribery elements with the Adani Group, obviously that doesn't help sentiment. But I think it's really just around the edges. Because, again, remember, I'm a U.S.-based investor focused on emerging markets.
Correct.
And that's all that I've done for 20 years. And our strategies are also listed in Europe. So I also spend a lot of time there with investors. So I have a pretty good pulse, of what American and European investors specifically think and feel about India. And I don't think it wasn't positive, but I don't think that's the problem. I don't think that the lack of portfolio investment in India can be tied directly to those things. I don't think there was a lot of investors saying, well, I was going to invest in India, except this Hindenburg report, so now I'm not going to. I think that India is a very foreign place for U.S. and global investors. I mean, of all the hundreds or literally thousands of investors I speak to, I certainly less than 5% of them have ever been to India. And so, but what they've seen are different images or movies that, depict India in a way that is very much a frontier market. And there is a large amount of frontier market in India. I mean, half the population is basically at the income levels of a frontier country. But I think that India has an image problem, if you will. But it has an image problem, but it's also looked on. People want to like India. I mean, there's no doubt.
Okay.
Because it's a democracy. So of all those investors I talked to, especially last year, the last 12 months, what everybody said to me basically was, yep, India looks really good, but we think the stocks are expensive. So I think India, it has to earn it, and it's going to earn it. And the investment world will continue to wake up to what is happening in India. But right now, it's all very abstract to them. And again, this is not good, but the image that the average person, right, and the average financial advisor in the United States, the average or Europe, they haven't actually been to India or China for that matter. So all of it's abstract. And so they get whatever they get in the newspapers or in the media, and then that becomes their image. And so I'm quite optimistic about India's future, because the world doesn't understand how good India looks from an investment standpoint. I mean, you can't, there will never be an emerging market that looks as good as India does today. It can't happen again. So
Kevin, I would agree with you on this front. The 4 years when Biden took office, we were into the pandemic, and as healthcare investor in India, those 3 years of pandemic and getting out of it, obviously a lot was shown by the media, and a lot on the vaccine diplomacy and the deep state and USID and whatever that is now coming in the last few weeks of Trump did put a lot of brakes in terms of the momentum and the investor LP dialogues that we were having pre-COVID. And a lot of it was on hold for us. So I do agree that there was a negative sentiment towards India, and then depending on what class and what asset and what sector the investors wanted to take a punt on, there was a lot of question marks. And I agree with you. But I am hoping that the clouds are clearing now.
Well,
at least I've seen in the last Trump won the elections, at least before the Thanksgiving, a lot of investors have visited India, have had discussions with us, have given us positive outcomes through those discussions and commitments. And obviously now in January, again, we are seeing a lot of positive movement towards investor activity and investment commitments towards India and our sector as well. So I see that as a much more positive than the 4 years of Biden between India and US as far as major institutional investors are concerned. Just wanted to see what your views were, since you are much more closer to the investors than we are who want to invest in India. And a lot has happened politically, geopolitically as well, including the pandemic. So let me just pick up on the valuation issue that you just mentioned. I am told about this even with some of our LPs and investors that I meet both in the US and across the world, that healthcare valuations in India are much more higher as compared to other emerging market companies. And it seems that the risk to return gets vitiated by them when they look at allocations to India and their India portfolio. How do we course correct that? We can't reduce valuation. Valuations are big subject matter of various factors. But is it true that we can do something to ensure that the confidence of the investors are there on how India is valued, both in terms of the price earning and future earnings?
Sure.
Can we do something over there?
Well, first let me talk about the valuations. That is, as you know, the publicly traded Indian equities have been in decline the last couple of months.
Yeah.
So the multiples, the prices, and thus the price over the earnings has got lower. And as I referenced, that was the most common thing people would say to me. They'd say, tell me India looks good, but it's expensive. And what I would tell them was, India is better than it looks because nobody understands the digital public infrastructure, which I think is so hugely valuable. No, I haven't met one investor that knows anything about this. Obviously, if I meet with an Indian investor, yes, they may know about the stack, but the stack is an unknown thing to most of the investment world that I meet with. So, and I think that's very important. But if you look at the Indian stock market, almost all of the U.S. investments go into the MSCI India Index, which is the 130 largest Indian company. Now, in India, of course, you reference the Nifty 50. So the MSCI is kind of like the Nifty, the next Nifty, and then the top part of the mid cap. So those 130 stocks, they have a high PE multiple. They have a PE multiple like the S&P 500, a little above the S&P 500, at least the end of the year. But the earnings growth rate was almost 20%. So, the PE doesn't mean anything without the growth rate. You're buying the future, so the slope of the curve, right? You can't really say if a PE is high or low without knowing the growth rate. And so if you put the PE over the growth rate, the PEG ratio right now is probably about 1.2 for the top 130 stocks. Now, that's not rich. That's not a bubble. I mean, it's a slight premium over the average emerging market, but India is not an average emerging market. India is the perfect emerging market in every way, on paper at least. The scale, first and foremost. I mean, it's bigger than, if you leave out China, India's population is bigger than all of the other emerging markets combined. It's got the youngest population, it's got the fastest growth, and it's a democracy, and a well-functioning democracy, and it's also got the world's best human capital, and it's got the India stack, and so it should have a premium. But the problem is, and this is pretty clear to me and was very much a clear takeaway from my trip in November, below the top 400 stocks, or even when you get into the mid small cap, the valuations got really high, right? But even in the Nifty universe, there's only 500 stocks, but there's 5,000 other public companies, and the small cap IPOs going up 800%. The options trading alone happening at Zerota and other. I mean, these are signs of excess, I think. I mean, I don't think on my trip, I didn't have a shoe shine boy give me a stock tip, but I had a person that they were looking to open a shop, and they decided they were going to trade the shares market, as they said. So, those are signs of exuberance, right? And I mean, the options trading alone, you can't really have a bubble in options trading. It's basically like just gambling, but I don't see a bubble in the valuation problems at the top, but I think there's been a lot in the next 5,000 stocks that are concerning in terms of,
But anyway, they're least traded. The investment activity or trade activity there is very low.
Well,
I would say they are more speculative in nature and do not reflect the overall stock market performance.
Well, no, I mean, the MSCI, the top 130 stocks, that's, I think, about 80% of the market cap of the...
Correct.
But my point is, there's been an exuberance about the Indian stock market, right? And I'm not worried about the valuations for the MSCI. I do think one of the other problems, and this isn't unique to India, this is a problem with all emerging markets, but first you have the state-owned enterprises, or PSUs, public service undertakings, which this was, when I first got involved with emerging markets 20 years ago, the China index was 80% state-owned enterprise. And people say, well, gee, I invested in China, I didn't make any money. And I'm like, well, because if you bought the index, you own, Chinese government, banks, and oil companies, and they're not trying to grow their profits, because ultimately what makes a company valuable is the profits. And the only way to grow the value is to grow the profits. And the stock market's going to do whatever it's going to do, and you don't control it, and I don't control it or know what it's going to do, but you need earnings growth to grow value. And so state-owned enterprises, they're not really there to grow their earnings like a traditional. Now, I think India's efforts to privatize its state-owned enterprises, I think if anybody can make a state-owned enterprise into a real company, India will do it. But I've been watching this for 20 years, and it's never happened anywhere else on the planet, right? I mean, you can have, Tata can take over Air India and maybe make that a success, but, having them operated by the state, that's not an optimal type of investment, I think, to capture the growth of it. Now,
Did you travel Air India this time?
Pardon?
Locally? Did you travel Air India?
I did. I spent Diwali and Shamli in UP, which was quite an experience and great. Staying in the second and third tier India was a great experience for me. And I didn't really, there was a lot of things on my trip that I knew I was going to see: quick commerce, the stack, infrastructure. You can't not see that. It's everywhere, especially in Mumbai. But the spread of all of the India story into the second and third tier. And that was wealth in the second and third tier, e-commerce in second and third tier cities, which is growing at, 50, 60%. And then entrepreneurs from second and third tier cities and schools. There's 30 publicly traded new age Indian technology companies or
We're
internet.
going to talk about their valuations as well.
Okay, well,
so let's step back to now Trump and his last few days in office. About a month now in office. He's not even completed a month. But a lot of changes, sweeping changes, a lot of things coming out. How do you see this taking off and his threat of tariff?
Well, here's what I would say so far. First of all, I don't know if you remember this or watched this, but late last summer, Trump and Elon Musk did an X, like a live meeting on X. And it caught my attention that I saw that it was happening. So I set an alarm to listen to it. And I did. And I listened to it. And I remember I walked over to my house afterwards and I said to my wife, I don't know what I just witnessed, but I'm pretty sure Elon Musk just talked himself into a job or applied to work in the government. And so I don't know if you saw that interview, but it was really quite amazing that the way, because I don't think they'd actually talked before. And, Musk would say things and Trump would agree. Then Musk would raise the thing. And by the end of it, I'm like, I think Elon Musk is going to go work for the government. So I kind of thought this might happen when I first saw that. But this is unprecedented what's going on. I mean, there's no two ways about this. And the speed of it, the aggressiveness of it, and this has just never happened before. And it's happening right now. Every time you go away and have lunch and come back to your computer, there's something new that's happening. And as you said, we're not even a month into it. And so, I think that there will probably be a whole lot more in the next 2 months. And I think that's going to involve India. Obviously, Modi's coming to Washington, and Trump has said that he wants to go to China in his first 100 days. So we can speculate about where this is going to go, but we're going to all have to just wait and see when the next headline pops up and what has been done. But it seems like with India, that Modi and the government is sort of anticipate with both India and China. It seems as if there's been an anticipation of this, and there's been actions to address these things ahead of time so that maybe it doesn't come to tariffs, at least for India, because China's already been tariffed. So I think probably the biggest thing is, the talk that was given during the election, the 40%, the numbers were giant. So I was worried about those kind of numbers. The narrative was, well, he's probably bluffing. And it seems like he is, or he's negotiating, right? He's making big asks, and then he's going to pare back and get the wins he wants. So I'm pretty optimistic about what the Musk presidency is going to mean for our relationship with both China and India. And, Donald Trump himself in December made a comment that was that basically if China and the United States could work together, we could solve all of the world's problems. Now, I don't think that's true, but if the United States and China could work together, that could just lower the tensions in the world, and, it would make it easy to end things like Ukraine. And now, I also think, and again, I'm totally speculating here, but I've followed and been involved with Tesla for a long time, and Musk, and you have to remember his point, his worldview, and he clearly is, if not one of the most important people that has the president's ear. He is doing business in China. He has great things to say about China and its engineering and things. And he also got close, it seemed, to going into India which just sort of fizzled quickly. And then they said, well, no, it's not happening, but come back later. And so
He's already opened an office in India and put an Indian expat to head the India office as of now. That's what we understand.
Well, so I didn't know that, but that doesn't surprise me. But I feel, and again, I'm totally speculating. I'm reading the tea leaves, as they say. I feel like Trump is going to embrace both India and China. and work to strengthen and collaborate with both of the countries, which sounds crazy. Again, based on the hostility that we've had towards China, based on the fact that Peter Navarro is still involved, but it wouldn't surprise me if that was the approach. And you just start thinking about the ways that all of the countries, and I should also note, as that China and India were not friends for a few years.
We're still not.
Okay, well, at least you can
we've not been friends since the war, the 65 war.
Well, but you were officially
we view Chinese as very suspiciously.
Well, I understand, but I think that the government and the Chinese government were not friends for the last several years not because of a war, but the shooting up in the mountains. And but 2 weeks,
and that's why we banned TikTok and many more.
and
which even the US could not do it.
And direct flights between the two countries. But I believe your foreign minister was in China 2 weeks ago, and I believe they've moved towards normalizing relations. So I don't know, but I have this feeling that Trump is going to embrace possibly both China and India. And I think there's a good reason for it. I mean, this is where the growth is. If he's running the country like a business, right? Well, who do we want to embrace? We want to embrace places like Germany, or do we, China and India obviously is the two largest populations, the second and soon to be third largest economies. This is where the growth is and where the future is. And again, and if he's got Elon Musk as one of his influencers, I think he's going to point that out. And so I'm optimistic. I'm totally speculating here, but I'm optimistic that 6 months from now, China will have upped the relationship and the economic cooperation with both of those countries.
Why did China do what it did to the US NASDAQ? 1 trillion wiped out because of Deepseek and whatever those protection on the NVIDIA chips and whatever that was there. How do you view this situation? It's hurting back US and US stock market in return. You slap tariff, I slap you with something else.
Well, I don't know that DeepSeek was a retaliation for the tariffs, but DeepSeek's definitely a thing. So now the Chinese did respond with tariffs today, I believe.
Yeah, I know.
And I think China's prepared for what's coming, and China has a lot of levers to push. I mean, it's not clear that they can be bullied because they control lots of other very important things, whether it's rare earths, manufacturing of pretty much everything on the planet at this point. So in terms of DeepSeek itself and its existence, it's always troubled me that we've tried to block China from having access to other technology, not just American technology, but the Dutch technology and the ASML machines that are so important to making these advanced semiconductors. And that's not what I learned in college, right? That's not globalization, free trade. And if you're blocking certain countries just to keep them from advancing, I have a problem with that. But nonetheless, that is what.
But don't you have problem when the Chinese have blocked Google and many other US tech giants in China?
Actually, Google left voluntarily from China. That was
whatever. You make it difficult, then Google will have to leave it voluntarily if you don't want to force them to quit.
Well, I don't know that I would characterize Google's departure from China in that way. But either way, look, the Chinese government is communist. It has its own way of doing things. They didn't ask, the people running the country didn't choose communism, right? And if you go back in history and look at how it happened, in fact, the United States Army might be the most responsible party for the Communist Party ending up in control of China. So at the end of World War II. But either way, here's what I think about China and DeepSeek.
It did spook our markets as well. And obviously it has emboldened India to now create its own version of DeepSeek and its own AI over the India stack. So whether you like it or not, the dominance of US over India and China on the tech front and the tech stack seems to be going away. And in spite of putting controls on the supply of different semiconductors to China and India, it does seem that things are not in US's control of what actions India or China can do on different fronts, and that could hurt back US themselves, which is what is happened in the last 2 weeks. How do you see this impacting investor sentiments as well?
First of all, I think it's a great thing. Again, I'm no expert, and I will say that as this AI thing, the first time I heard about AI was 20 years ago. I met with a guy from Google who ended up becoming a client of mine. And he's the person that wrote "Did you mean?" when you misspell a word in Google, which was predictive AI. And now he's the leader of one of the larger AI companies. Actually, I think he's now technically an employee of Google again, but they bought the rights to his company's product. But I'm sure you remember Sam Altman's comment to the Indian, question about Indians starting AI and him saying, no, it's too late and you don't have enough money and you're never going to pull it off. Well, I cheer the DeepSeek because it's basically like giving the middle finger to that thought that, only we can do that, right? And the other thing that's alarmed me about the AI was the idea that all of a sudden we have to start building nuclear reactors just to have it. I'm surprised people haven't put up a red flag on that to start with. I'm like, we have enough trouble getting enough power. Now we're going to open nuclear reactors to power this stuff. If it is legit, which it appears to be, if it can function the way it appears it can function without the most expensive NVIDIA chips, without building nuclear reactors, that's a win. And if it can make India in particular competitive in this, that's a win too, a big win. And so I applaud it. And it's also, I think, selfishly, because, we invest in Chinese internet companies, not just Indian internet companies, but I think it's a big win for the Indian internet sector, or the Chinese internet sector, which has been beleaguered. Alibaba, Tencent, Baidu, these stocks have been beaten down in a huge way in the last several years and are selling at, single-digit PEs with piles of cash. But because of a number of reasons, they're completely out of favor and became uninvestable. But now they're shining a light back on these businesses with DeepSeek. And so, Baidu, for example, has a self-driving car business, Apollo Go, which is as big as Waymo. Waymo's market cap it's private, but it's got a $65 billion market cap. Baidu has a $30 billion market cap, and that's off. And it also has a real profitable business, which is the Google of China, the search engine. So I also applaud this as shining a light on the Chinese internet companies, which have been, including Tencent and Alibaba, which have invested significantly in AI. So I think DeepSeek is a great thing and obviously has shaken up the world in a lot of ways, including valuations of a lot of companies in the US and elsewhere.
Well, I just want to take two reactions. One was Trump's reaction and second was Elon's reaction to DeepSeek. Trump obviously said that this is a threat and the tech giants in the US need to wake up and smell the coffee. And Elon went the other way, saying that this could be a short-term blip, but the US tech sector is robust enough to take this in the stride. And then the Wall Street analysts have their own versions. Some of them have given history of such innovations coming out of deep tech, innovations coming out of China, have only lasted for maybe 1 or 2 years and then they have vanished. And in the process, they have taken a lot of investor money and vanished. How do you counter all this, and what is your point of view about DeepSeek or any such innovations emerging out of China's deep tech and how they have utilized investor money and why have they failed in the past?
Well, if you're talking about Chinese internet companies raising money and failing, they haven't failed. I mean, Alibaba, these are massive.
Well, I mean, I'm talking of the next generation. Alibaba and all, yes, they have become too big to fail now. But many DeepSeek-like copycat models of deep tech, they have survived for a year or two with their innovation, and then suddenly the product has vanished or they've vanished.
Well, I don't follow the private, deep tech sector specifically, so I'm not aware of any of those things happening. In terms of what Trump said or what Musk said, I stick with what I said, I guess. I think DeepSeek's a great thing. I actually used it yesterday for a while just to finally play with it, and it's pretty slick. And again, I have no way to, because as you also know that there was some people saying, well, they just downloaded ChatGPT somehow,
correct,
which was also kind of troubling to me that was even possible. It doesn't seem like much of a moat if someone can just whatever they called it, copy it. But I think it's good in multiple ways. And the fact that China was able to do it without access to the best hardware, what do they say? Necessity is the mother of an invention. And so I applaud it. And I would applaud it no matter if it came from, China, India, Romania, right? The fact that a scrappy team could say, okay, well, we can do this and find a new way to do it. And again, I'm no expert in this, but the output that I saw from DeepSeek was, I thought, as good or better than what I'd seen on ChatGPT. So we'll see. Again, I'm no expert in this or where it's going, but it is fascinating to watch.
Great. Let's just switch a bit further on the tech front itself. How do you view investments in the new age internet economy, both between India and China? Apparently, we just had the Chinese New Year, and the consumer sentiment and the consumer demand that drives these new age internet economies in China was the lowest. And similarly, boost consumer sentiment, consumer demand. On the other hand, the Chinese central bank has also infused a lot of liquidity. I'm told of close to about $150 billion into the banking system to ensure that there is liquidity and there is enough credit flows to ensure that there is a redoubling up of growth effect into the economy in China. Do you think the future multiples and the future projections of these new age internet economies in China reflect all what is happening currently in the last few weeks of tariffs and Trump and DeepSeek and all these recent events vis-a-vis the long-term view?
Well, here's what I would say. I think Chinese internet companies are very cheap, and they could double and they would still be cheap. They have been incredibly out of favor. But let's just go back to a high level. What my business is focused on, what I'm focused on, the new age, as Indians call the new age tech companies, or internet companies as we call them more regularly. The emerging market internet story is perhaps the greatest growth story in terms of business growth of our lifetime. And it basically, you have in emerging markets, you have 6.5 billion people that are becoming consumers. They want all the things we have in the developed world: more food, better clothing, air conditioners and heaters, vacations, want their kids to go to Harvard, and they want a car. And so that's the main story. But what has happened, and that was a very well documented story, even 30 years ago. But what happened is the computer finally showed up in emerging markets. I had a computer for 20 years before I got my first smartphone, but most of the world never had a computer until they got their first smartphone. And then the third part of the story is called the internet. And I got the internet 20 years before I got a smartphone also. But now all of the rest of the world is getting the first computer, the first internet. And because they've never had a bank account or a credit card, they don't have a Walmart store down the street, they don't have all the things that we have, the emerging market consumer is leapfrogging. And so that is driving this emerging markets new age tech sector, which has had massive, massive growth. Now, when I launched EMQQ 10 years ago, 65% of our portfolio was China, because that's where the publicly traded internet companies were. There was only 2 Indian internet companies. And so in many ways, India now is like China 15 years ago or 20 years ago. When you look at the GDP per capita, when you look at a lot of other things. But what is so exciting about India is when China started to grow like this, there was no smartphones on the planet. China had 200 million PCs, but nobody on the planet had a smartphone. And now India is kind of in the same growth part of the curve, but you have $12 Geo Bharat phones available, right? You have pocket-sized supercomputers for $12. And when you put that on top of the India stack, this is a big deal. And so China's internet companies, however, are very large. And in fact, while China's still an emerging market, that basically to be a developed market, you need about $25,000 a year of income or GDP. And China's at 12,000. So it's only halfway to being developed. Now, India's, way down in that $2,000 range.
Way down.
But
so
that's
we don't want to even compare ourselves.
No, but
we're happy where we are.
No,
we're working towards it.
No, I know. And I think, I don't know that 2047 goal.
Put ourselves to pressure.
I don't know that 2047 goals will meet, but the fact that it's even, India should be very proud of what it has going on. And I think we'll continue. But the Chinese e-commerce market is 4 times bigger than every other emerging market combined. So it's an emerging market, but when it comes to the smartphone and e-commerce, they're way beyond anybody else on the planet by a mile. Right. And you can see it. The live streaming, it's a very developed internet economy. And so one of the things that Alibaba and Tencent have to deal with is the law of large numbers. They had a decade of massive growth. They grew at almost 40% a year for 10 years. So they can't grow the way they did in the past. Having said that, because the stocks have been so cheap, they've made massive stock buyback. So I believe last year the Chinese internet companies reported about 30% earnings growth. The revenue growth was only, 10 or 12%, but the stocks are so cheap and they're so profitable that they've bought back a lot of stock and they still have a ton of cash on the books. Alibaba, it's had a couple of good days, but it was selling at, 5 times earnings if you took out the cash. So Chinese internet stocks are cheap. They're also starting to look investable again, I would say. Now, let's go to the India internet side. So, 4.5 years ago, we only had 2 Indian stocks, Make My Trip and InfoEdge. And in 2020 and 2021, there was 25 IPOs, and a bubble. The Indian internet had its first bubble. It'll have another one, I'm sure, and, there'll be more in the future, but it had its first one, and that was November 2021 when Paytm went public. But finally, there was enough Indian internet companies for us to launch EMQQ, our India New Age Tech ETF. And so that's Paytm, that's InfoEdge, that's Zomato, that's Swiggy, that's Nykaa, Make My Trip, Policy Bazaar. So the New Age Tech of India, but these companies are very small versus the Chinese counterpart, right? But they're essentially all profitable except for Paytm, which also was the best performing stock last year, even though it wasn't profitable. And the thing about India's internet is it's so early. I'm a big believer. I'm an Omaha person when it comes to investing first and foremost. And the miracle of compounding is so important in investing. And you want to have a string of growth numbers go as long as possible. And let me use Zomato as an example. The food delivery in India per capita is like $10 per annum, which is like 5% or 2% of what you'd find like in China for you. And so Zomato's room for growth is huge. And you're already seeing this because in the U.S., our food delivery leader is called DoorDash. And I use it all the time. If I want to, have some food brought to my house, that's what I'll order. When DoorDash showed up in the United States, we had plenty of restaurants. And the restaurants had plenty of suppliers that would, double park the trucks early in the morning and the guy would get out the dolly and bring the tomato sauce to the restaurant. Well, everything is green fields in India. It's like white space to grow into. And so Zomato is, it's the DoorDash, but it's also got the Hyperpure business, which is selling restaurant supplies, which was the fastest growing business and a huge opportunity. And now you have quick commerce, which it will appear is going to overtake the food delivery business. And so the early stage
but both
of all
Swiggy and Zomato quarter results are out. Zomato profitability dropped by more than half last quarter, and Swiggy's losses have actually been widened. So the issue here is how long the investor wants to wait and watch and stay invested, like Paytm. And that's why it's not something that everybody wants to hold for the long. There are other alternative viable investments that domestic investor would rather stay invested and get 14 to 15% in return rather than invest in a new age internet economy and wait for 5 years to get a compounded, say, 85 or 90% return, which would equate to being invested in a nifty index stock.
Well,
I'm talking from a domestic guy's sentiment.
No. I understand. And that has been the sentiment here in the United States. Why would I invest in Amazon.com in the year 2000? Doesn't make any money, right? I actually shorted Amazon.com in 1998.
I shorted in 2016.
Well, but again,
as part of my hedge fund.
The miracle of compounding is one of investors' most important friends. And there is no doubt in my mind that the Indian internet sector, the new age tech sector, is going to have massive growth of revenue and massive growth of earnings. And the PEs right now, the PEG ratio is only a little bit over 1. But more importantly, looking at the PE of Zomato is crazy at this point. Like, you don't want them focused on, oh, I want to report. Almost all of their quick commerce stores are in tier 1 cities so far. So why would you be focused on, oh, we have to report this or that in terms of profits in the next 3 months when you've got hundreds of cities you can grow into? And so again, if you went back 35
now they are in, so till they were privately owned and invested by private equity investors, they would not be in public scrutiny. Now they are on a quarterly scrutiny of the stock market and the analysts. And I'm not sure, I can share tons of Goldman Sachs and analysts of your repute in the US who track this year these sort of stock, and they do have concerns in terms of whether to buy, sell, or hold. Their recommendations are such. And for a retail investor who wants to get a return above the normal rate of interest to hedge for his savings, do not find these sort of Zomatos and Swiggies attractive. One, given what the losses that they are mounting, and understandably, they are investing a lot of capital in quick commerce and their dark stores. But who's funding it now? It is the public, the general shareholders. And that's where the conflict was. Swiggy and Zomato very early going public, or they should have stayed private for a much more longer time till they would have had a scale and competitiveness and cash flows to sustain the type of business of quarter on quarter when they went public. So this is a common debate that we are having out here, looking at some of the new age. Were they viable enough for being in the public market early, or were their private equity investors or their private investors forced them to go public at valuations that were unrealistic just because they wanted to exit? So these are the kind of conversations and cocktail party conversations that we keep having here.
Yeah. Well, first of all, Zomato is profitable.
It is.
Swiggy may not be, but Zomato is.
Yeah, but Zomato had a 50% dip in their quarterly profits for
again,
Q3.
No, I don't care. Personally, I don't care what their quarterly profits are. What I care about is in 10 years, did they take 8% or 15% of the Corona store revenues, which is giant number. So, and this is, again, I understand what you're saying, but in the United States, this was also unheard of. You didn't go public when you weren't making any money, but there was a change. There's been a big change in the way the capital markets work, as you know, and Amazon was part of that. Amazon didn't make a profit for like 20 years, right?
Agreed.
And so, because their eye was on the long game, and investing should be on the long game. Look, even if you know any of these things, you don't know what the stock market's going to do in the short term. You just don't. You don't know. I don't know. I don't know anybody that knows, and I've never met anybody that knows. So all you can focus on, and should focus on, in my opinion, everyone can invest differently, but is where am I certain I'm going to get growth of earnings? Because earnings is what makes companies valuable. The more you grow your earnings, the more the value. And that's the way it works. And so I know that Zomato I don't care about what they do this quarter or next quarter, right? What I care about is where they're going to be in 10 years. And the Mr. Market's going to do whatever it will. Sometimes it will throw these things away, as it did in the, beginning of 2022 when the entire new age tech sector dropped 70 or 80%, especially Paytm. But I've seen this before. We've seen it here in the United States. We saw it in China, and now we're going to see it in India. And the Chinese internet companies haven't done great, but they've done a lot better than the Chinese full stock market. And so I expect the same to be the case here. I mean, would you rather own the Adani Group or Zomato, right? Would you rather own Coal India or Nykaa? Right? I mean, I think that, there's going to be a lot of continued growth because, again, in almost every one of these sectors, it's so early. Only 3% of Indians fly on an airplane regularly, right? And so, Make My Trip, has been serving that top of the pyramid. But then you have a company like Ixigo, which is, dominant in buses and trains, the future flyers. So I just think there's so much room for these companies to grow as India grows. goes. And we wouldn't be having this discussion if it wasn't for the India stack. I mean, that's the other thing. I mean, your country is, you are the digital infrastructure that your country has is allowing all of it. So sorry to, go on a tangent, but
Tell me, Kevin, what would you recommend? You are there for the long haul, and you did mention that those who entered and waited for that moment for Amazon to really make good of the losses and the time it took. Where do you think is the inflection point for the Indian tech companies who are already public, and where do you think would it happen in the Trump era, or we'll have to wait for the next president to see that things will take off for India and the Indian tech sector?
Well, here's what I would say to that. First of all, the fundamental growth, the income statement growth of the Indian new age tech, that doesn't need anyone's help. That's going to grow, and it's going to grow a lot. In terms of sentiment of investors, first you need awareness. I mean, the problem is, as I mentioned earlier, most Americans, most Europeans, they've never been to India. It's all very abstract. They have no idea what Zomato. They don't know what the India stack is, right? All they know is, Slumdog
now
Millionaire.
We have Goldman Sachs, practically everyone covering it.
No, I understand that.
The India desk of all the top analysts.
Absolutely. India is getting more and more coverage, and that's going to continue. And it's getting more and more coverage because it's fundamentally doing very well. And I'm not talking about this quarter
No, I'm just saying that.
But it needs more awareness. And again, the country, this is important to me. And I am hoping to be part of the solution to this. But people need to understand India. They need to go and see India, which it's very hard to get people to actually do something like that. But they're hearing about it more. They're hearing about it for the right reasons. And that's going to continue. I don't see that isn't going to continue. You have everything you want on paper, bigger, younger, faster growing than all of the other emerging markets. You've got the best human capital, which is now becoming more entrepreneurial, right? As you know, the number of startups has gone from 500 to 120,000 in 7 years. So everything's there, but it takes time, right?
My point was, will this happen within the Trump 4 years, or it's going to take even longer than that?
Well, I don't know what the destination is exactly that we're trying to get to in the 4 years, but I think every day and week and month, the India story is getting heard. And again, not because people decided to talk about it, because it's real. It is a real thing. India is, in my opinion, the perfect emerging market. Its scale, again, is, when someone tells me I'm excited about Vietnam, I'm like, well, this
too small.
Right. I mean, it might be a good story. There's 80 million people or 92 million people. Uttar Pradesh has 240 million people, right? So, I mean, it's like the scale of India is off the charts. But the other thing is the human capital. I mean, there's 25 S&P 500 companies that have Indian CEOs. You're not going to find that in Vietnam or Indonesia. So India, as with anything else, you got to earn it. You are earning it. India has earned this position they're in now. 3 years ago, 4 years ago, nobody was talking about India. I wasn't even talking about India because there wasn't any Indian internet stocks, right? There was only 2. So every year, India is going to make progress. That doesn't mean the stock market's going to go up every year. It won't. It's had a long run, positive years, but that was a little concerning because most of the domestic shareholders have only had accounts in the last 9 years. So I think there's 150
I can
million.
empathize what you are going through about selling on India, because when I was doing my hedge fund, which was invested in the US and the European markets, many of the investors here did not know, other than the Google and Microsoft and a few names, that what is the coverage. They didn't know that there is a Shell, there is a General Electric, which are even bigger than, or used to be bigger than, Google and Microsoft at one point in time.
Yeah.
And guys like, Pfizer was obviously operating here, Coke and many other brands or companies, and how you could probably take a punt and invest into them through a hedge fund, and how we could bring in wealth or diversify their portfolio. So that was a huge selling process First is, the US market, their diversity, their breadth, then the individual sectors and their rhythm, how our algos would probably put those signals together. So I wish you luck in terms of being able to convince investors in your area when I was coming to US to invest from monies from this part of the world. I'm sure it is a task, and I really like to congratulate you that you've taken that mantle to look at emerging markets and look at a particular sector to focus on. Kevin, I want to take on a few more issues before I let you go. You see a lot of, and I hope you have read our forecast as well for 2025 on health and life sciences sector as well, which I shared with you. Just in our own sector, and I'm not talking about the overall new age internet economy in India, there are a lot of startups and enterprises which are now embarking on AI or re-architecting the India stack, as you call, onto AI or latching onto AI, whether it is through conversational bots or through other ways of ensuring that there are more product features available for the consumer to transact and to enact. My point here is that now, and most of these were all dominated by the US-based AI infrastructure and AI-based architecture and hardware from the US. Do you think what DeepSeek has done could probably mean that India could probably go the Chinese way rather than the US way of adopting AI in this India stack now?
Well, I would think so and hope so. Again, I mean that the capital required for the ChatGPT, the commercial, the NVIDIA customers, that's a lot of money and a lot of huge capital investment. And so if AI can be deployed at a fraction of that without needing nuclear reactors, that has to be a win. And
no, our government in the budget has now allocated funds for nuclear reactors.
I saw that. I saw that. I think, well, I don't know if that was specifically for AI. I think that was,
I'm just joking.
But I understand the point. So it seems to me that even if we say DeepSeek's 80% as good as ChatGPT, right? Then it seems like if it can be had at a fraction of the cost, it seems like it's probably capable of most, at least near-term use cases of deploying AI. And so I think that it's a win. And I think India, in spite of what Sam Altman may have said, I suspect India is going to have a very robust and its own breakthroughs in AI. And I know.
So is DeepSeek going to become deep threat to the US deep tech? That was my whole thing. And do you think there would be a little bit of further correction in the US market?
I don't have an answer to that, but all eyes are watching. I mean, you and everybody else knows the dollar amounts that have been, the market cap additions that have had, the budgets of, Meta's $65 billion, AI budget, right, for this year. I mean, the numbers are staggering and big. And
yeah,
I mean, ultimately, the DeepSeek moment was about, do we really need all that? And that remains an open question. And, you also have, as you know, that these things don't happen like, if you're going to spend $65 billion on something, you've spent a lot of time planning and budgeting and
architecting and solutioning.
Right. And so it's that institutional momentum where just, okay, DeepSeek shows up. Are you going to hold a e-brake on your $65 billion plan and say, wait a minute, maybe we should rethink this? No, that's not really the way the world works. Will they look back in 5 years and go, oh, shoot, that wasn't a very good investment? Who knows? I will. One thing that and again, I'm no AI expert in any way, shape, or form, but in my office upstairs, I have a board. It's a piece of wood. It's about 2 feet long. And the label of the board is Analyst Training Program. And on that board are all of my mobile phones I've ever owned. Nokia, Motorola, BlackBerry. And there's a blank spot at the end. And there's 4 iPhones sitting on top of the board. And my point to the board is making electronic boxes is not a great business, right? I have a closet of old PCs. They don't have a lot of value after a few. So when I see someone spending $65 billion on electronic boxes, I mean, can you think of any electronic device you bought 5 or 10 years ago that hasn't lost 85% of its value. So
a lot of them. Many of the penny stocks that I've invested have no value at this point in time.
Well, I'm talking about the manufacturing of toasters or televisions or whatever it is. It's a hard business. It's very competitive, and there's always new versions coming. I think I bought a flat panel computer monitor for $1,000 in like 1990. Today, you can buy a 100-inch television at Costco. In the United States, it's 5G or 4G, or 4K, and it's $900. So my only point is people are spending a lot of money on these NVIDIA boxes, and I don't know, are they going to appreciate in value, or are they going to be better versions in 5 years? So,
well, I can just tell you from India's point of view, just at the type of price points and the consumer requirements are, the mid-tier companies are rethinking the AI architecture and strategy. It may not be NVIDIA, or could be a local homegrown stack, or it could be now a mix of DeepSeek with ChatGPT. And that is what has opened up challenges now for Trump and the US tech sector as well. Can it really DeepSeek and attract through tariffs the type of outcomes that it wants for its own country and its own industry there?
Well, there's a lot of people today, tomorrow, wondering this question, just like you and me, and none of us know.
I would like to leave that as an afterthought, both for our listeners and for our analysts as well. I'm sure it was a pleasure speaking to you, and I would love to catch up with you next time you are here in India, Kevin. And I want to take you to a showcase of many startup and entrepreneurs in the new age tech startup here in India, and maybe that should get you excited on the long tail of what our startup ecosystem and how these startups are scaling and what they're doing innovatively. We're not very lagging behind from the Silicon Valley. What happens in Silicon Valley catches up here in another 6 to 8 months' time. So that's a whole excitement between what Trumpnomics can do with DeepSeek investments in our tech sector here. And it's great talking to you once again, Kevin, on our podcast today. I would love to kind of open this up also to our audience, and there would be a few questions which I can circle back to you as well. Particularly, we don't track China, so there's many questions that are emerging from the China side of it. Probably I'll circle back to you as they come.
Okay, excellent. Well, thank you so much for having me, and I'll look forward to seeing you when I'm in India next. And I always like to see and meet founders and startups. It's been part of my life for 25 years, and I'm very focused on India, so I will take you up on that offer.
Thanks so much, and thanks for your time today.
Okay.
Finally, we were able to record this.
Yes, I'm glad we were able to connect. Thank you very much.
Thank you, Kevin.
All right. Have a great day.
Bye-bye.
Bye-bye.